I am here with another edition of Chart the Markets. I'm Mark from Blunhouse Technical Analysis, and I'd like to extend our thanks again to FEG Token and SmartDefi.com, as well as our exchange partner BYDFi.com, which has one nice super slick interface for you to trade on. And if you head over to SmartDefi.com and you enter the code capital K, 5, capital Z, 4, capital T, lowercase p, that gets you eligible for our trading bonus draws that we do twice a session. So now that we have that out of the way, we have more and more volatility in our markets that we have to deal with. And it's interesting. We were only gone a couple days, and it seems like, the more things change, the more they stay the same. And here we are right back at a level that we were in, 2 days ago, with simply identifying that level at 100,946.90, put it in there last week, hit it the other day, and here we are back to it yet again. Why does that happen? It happens because current price looks for past price. And this was just a simple, quick and dirty look at where we could attach tops and bottoms of some previous candles. Paying attention to these levels here, of course, where you have those equal bottoms for some reason. They're always relevant, and yet again, we came back to test those levels. It's just a matter of when price is retracing, it's looking for an area where it can sit down and rest. And when you go have these big parabolic moves up, those retraces feel very, very intense. And if we just add a little bit of context to our chart by adding a 20, a 50, and a 200-day moving average, well, we've broken the 200 in a significant way. And this level at 100,946 is exactly exactly in for another tag. So this is starting to get a little bit concerning, right? If we look at our weekly chart, I'm just going to add in another average here just because I'd like to see where it is in relation to the 50 and the 200. So this is the 100-day that we just added. Because if we close below the 50, we're going to have to make the assumption that on the weekly we've broken that level, obviously. And if we break one level, we look for the next. And I think the 100-day might have some relevance in this equation at some point in time. Because I don't think it's going to be an automatic journey, obviously, to the 200. So on this weekly chart, broken the 20, broken the 50. And if we are looking for areas where price can rest, well, just by looking quick at this chart, you can see some basing of price through here that aligns perfectly with this level. Now I understand it's a weekly chart. Time and price will obviously adjust somewhat, but I think target-wise, if this breakdown continues and you fail that 100,000 level, that in 109.46, then you have to start looking somewhere down here. And I hate to say it, but that's in the mid-80s. Now, I'm not suggesting it's tomorrow. I'm not suggesting that it's going to happen at all. I'm just suggesting that in the event of current downward pressure and you break levels, you look for the next. And, unfortunately, that's the next. So we have to keep in mind when we use the volume profile, it tells us where the volume has and has not been. Right? Where the most dense volume is identified down here by that blue color. This is just light volume. What happens when you trade in light volume? Price can move down just as quick as it went up. And that's a reality that I think, people have been feeling a little bit of late. And this is why we keep an eye on all these multiple time frames, because everything is fractal. So, I hate to say it, but there is probably a little more downside. I'm just going to switch to the chart that we've used where we've created some levels. And, you know, the next level down that we had was 98,132. And this one we drew in the last session at 94,097. Again, just very rough. But I don't think these levels, although relevant, I think what it's going to want is this. These gaps here are kind of sketchy. If price falls into those gaps after breaking that level, remember, price is drawn to places that it's been before where buyers and sellers have shaken hands in the past. You know, the upper value range is really the closest significance, and then the 200 runs into that area. So to come back to the 200 on a weekly chart is not irrational. It's just looking and feeling a little bit irrational right now, simply because of all of that parabolic move upward. So does this mean you long here and all that stuff? I think you need to let this unwind. What are we being told by our script? We're being told that, you know, on the weekly chart, we're in a downtrend. And as long as we have divergence and we're working under a sell signal, there's not a lot of reason to go long. So we just wait. And if we kind of, you know, peel back the onion a little bit and you go to the daily chart from the weekly, just to get another look to see, hey, does this look like it might be reversing? Not really. Right? You've still got all this divergence between the T-line and the 5 EMA, and that's telling you that that trend that you're in, it's still intact. All right, so I don't like this impulse down and going sideways essentially back to the 5 EMA, and then of course as soon as you kissed it, it retraced. So there's a lot more to happen here. Price doesn't seem to be able to get above these levels that we start to look at that could reverse trend. And what do we do to see where we are in the process? Well, we just pull that time frame back a little bit to the 4 hour, just as an example, to see what's going on. And on the 4 hour, although there may have been a trade in here for some people, this really ultimately is a failed breakout. And price came back and took out the previous wave's low. But we're still working under a sell signal, and we're still, you know, diverged heavily here. So this trend has not reversed yet, at least on this time frame. On the hourly, it starts to look like it might be basing out a little bit, but really it's just trading below. It's like there's nothing really here to get excited about yet. Right? And that's why we use the methodology that we use, because it keeps us out of trouble. Right? Keeps us from making a mistake that we didn't really need to make. Right? And we make it real simple for you to follow it. So do we have the kind of confluence that would suggest prices going higher? Not yet. Yeah, it's nice to see some equal looking bottoms, but are we reversing? No, not yet. You haven't broken trend on the 1 hour. You have not broken trend on the 4 hour. In fact, this was essentially your first touch rejection of the 20. And, you know, price pulled back. These candles, these big red candles here, are partially responsible for this big gap that you see here on the right. And you'll see that to the left as well. But this looks like a failed breakout. There's your first test of of the 20, that's obviously failing. And that tells you something, right? As you start to push the clock ahead, there's the 12-hour. Very easy to see the failure here on the 12-hour. It just can't break the T-line. Failed on the 4-hour at the 20, is failing, can't break the T-line here on the 12-hour. And of course the daily just looks like one big red candle down. This is why I pay attention on the daily to where the T-line and the 5 EMA are, because what often happens, if I'm looking to enter a short and I'm just using the daily, I want to look at the daily because I'd like to know where this 5 EMA is, because what happens, or the T-line, because if I'm going to catch a short in what I think is just kind of a retracement hoof higher that's going to fail, it'll happen in and around those areas, right? Quite frequently. And that's why I pay attention to them. This is not a good look. It just isn't. Let's take a look at, where's our friend XRP? Here we go. Similar look, right? Daily chart that we're looking at. 20, 50, 200, and I guess the 100's on here. We can take it off. Volume profile. You can see price struggling to get above the point of control. And we're talking about that now well after it's failed, but pay attention to what happens when it reapproaches it. Because if you're able to break through it, hey, that might be a significant move to the upside, or at least the start of one. But if you were to fail there again, you don't want to go through all this process all over again. So that'll be a key area to keep an eye on over a longer time frame to see if price really wants to go higher. The concerning thing on the daily, and I'm sure a lot of you are looking at it already, is this. When the 50 EMA crosses down through the 200, that's usually an indication of more downside to come, right? That's typically what we're looking at when that happens. So if we just want to go to a weekly for a moment now, pay attention where you can to these structural levels. And the weekly charts, because there's less noise in them, it's often easy to see these levels. Now this 215 that we had marked in here that we hit, when we look at it on the weekly chart, notice how it lines up with the bottom of the 5 EMA, where it kind of almost creates that double bottomy looking type of pattern. I always look to see if I find that on my chart, because quite often as current price is looking for past price, that level gets, becomes relevant. And there you go. This is a real good example of how calm the chart looks when you take the candles off, right? And how manic it can look when you throw them back on. And this is what eats us up every single day, right? The intraday mania that we get fixated on, when we really only need to be focusing on a handful of things. And I've taken the candles off this chart intentionally because I just want you to pay attention to how just simple moving averages, in this case these are simple moving averages, and I use simple in a different way. These are SMAs, these are EMAs, the 5 and the 8. EMAs, everything else is simple. I was brought up on simples, using the exponentials occasionally, but my comfort level is with the simples for the most part. But using the T line and the 5 EMA is something that I've gotten accustomed to over time, and I've just kind of overlaid it onto what I was already using, and it actually is more effective. That said, what I want you to take away is how simple this can be. One buy signal and this divergence between the T line and the 5 EMA is telling you that you're okay. If you're looking at this chart from a weekly perspective and you see this, and we talk about this all the time, those Batman ears usually signal something else that moves in the south direction, and that's what happens here, right? So you don't even need the candles to pick up things early. That's essentially when your short-term averages like that double top, whether it be a 15-minute chart or a weekly chart, it tells you that, hey, you might be approaching a move to the downside. Here at the bottom, you get the reverse, not quite as intense, right? And price bounces. Equal levels, you bounce. Sell signal, you're out. And we know this is where it got really chaotic. But just to give you an example of how manic the chart can look when there's candles on and prices bouncing all over the place. We're trying to take the noise off the chart. Ultimately, that's what we're trying to do. And there's lots of different ways to do that. Our friend Rico really likes the Heikin Ashi candles. Where are they? There they are. And they're great. Right? I like them as well. I think they're, great, especially, for new traders. And then, ironically, I see a lot of traders that have been trading for decades come back to using Heikin Ashis later on. So it doesn't matter, what stage your trading career's in or your journey. These things work, right? And they're different from regular candles because they have a look back similar to how an exponential moving average has a similar look back. And then it's doing some averaging. But you can still use Heikin Ashi candles and our system. And if you want to add another layer to it, I didn't mean to get sidetracked here, but a lot of people appreciate this. So if you want to add another layer, what you can do is add on the parabolic SAR, stop in reverse. And I'm going to back this up here. Here's the theory. When you have, you see this is a green candle. It really doesn't have a bottom wick. But the parabolic, if I was just using my Heikin Ashi strategy, it wouldn't. And the reason it does is because it's a green candle with no bottom wick that has the parabolic below. Different parameters obviously working in the background. But price, that would be your entry. And then once you're in that trade, you can manage the trade the same way by VMA, which is just a guide. It's just a real good way to emphasize that if you're short in this trend, you just might as well hang yourself, because there's just no way that it's going to work out the way you want. The objective is not to outsmart other people or the market or whatever you think you're doing. Just follow the chart. The smart money is buying this up here, all through here. So here's where they can't hide anymore. Price starts to move. You're just going to follow. You don't have to reinvent the wheel in order to determine where to buy, where to sell, and how to manage the trade in between those two places. So here we are now, after a real strong move, and this line up here we know is the upper value range of the volume profile, We don't have the bulk of it in view. We know that's the POC. We know this then is the lower range. Now, if you had to make a decision up here after taking this signal, like a lot of people that are using our system say, okay, the buying part is easy, but like I don't know when to close it. Even when there's this divergence here, I get confused. Well, all I'm going to say is, first off, there's never anything wrong with taking your money. Never anything wrong with taking your money. So there's no shame in that when you close it. If this was in real time and I was looking at this daily chart and I did in fact take this early entry, knowing this is the upper value range and seeing the resistance that's happening up here, I would probably be inclined to either take some off or close it entirely, simply because you can see price struggling and to get past it. And if it did break through it and look like it wanted to run, I'm figuring I can always re-enter. It's not the end of the world. But we've seen our charts enough to kind of understand what might be around the corner. We never know for sure, but usually the chart's going to give you a little bit of a clue, and that's what was happening up here. You were rounding out, struggles breaking through that upper value range. But here is your entry candle short. So here's your parabolic that's above price, and there's no upper wick on that candle. So that's your entry to the downside. In this case, this is where our signal fired. So you can see how sometimes they're one's ahead of the other, and that is going to be true on all the time frames you're looking at. But you know now here's the divergence. Now you're trading on the lower side, so directionally you're okay. Now you're trading on the south side of the T line, even better. Here's your confirmation candle. And here we go. And it's just rinse and repeat, rinse and repeat, rinse and repeat. Whether you're using some, moving averages to try and test that support and resistance level, or you're using those benches of past price or liquidity levels or fair value gaps, whatever you're using, understand that it's just a measure of where money and volume has and hasn't been typically. That's it. And what you're going to find is that current price is attracted to past price. So if price is rising, it will be looking for where it's been before to the upside, because that's where its comfort zone is. That's it. Don't make it any more complicated than it needs to be. If you're trading this chart and you can't break the point of control, knowing that everything above and beyond the point of control is somewhat gappy, well, guess what? You would have been right if you were short. This is kind of like the test, fail, test, fail, test. Ridiculous. Everyone experienced that. But I mean test, fail, test, fail. You can't will price up, right? You can't will price up. It doesn't matter what your personal situation is, how bad you need the trade to work out. You just can't. And of course, it's always when you're on the wrong side of it that it's especially cruel. Similar situation with Solana. Do you notice how you're making these lower highs? Are lower highs the sign of uptrends or downtrends? Downtrends. We could easily, just like we do on a lot of our other charts, draw this. I do this all the time, just as another base of measure as time goes on. Because at some point in time, this will be relevant as price tries to break out. Just like it, was on the oil chart that we look at. And as unlikely as it feels, right? Price will just keep looking for where it's been before. If we look at our weekly chart, we've obviously been in here creating some levels already, but what do you think it's looking for? This is pretty real. 127. Why? Because it's been there before. And if we come back here on Tuesday or next Thursday or whatever it is, whoops, we'll check the receipts and see where we are. We fail this level. What's the next level? These two bottoms that line up with back in here. And it's just a benchmark that we're using. It doesn't have to be, again, it's not pin the tail on the donkey. It's just there to get you close so that you don't hurt yourself. But as unwanted as these looks are when you're long, it is kind of what it is. You're not going to be able to change it. You've broken the 20 and the 50. So I just add in a couple moving averages just to give me a little more context onto what's going on. And you can see these three candles were resting on the 20, and then they completely broke down, breaking the 50 on the weekly. That's not good on any time frame. When that happens on longer time frames, it's probably a little scarier. So this is, you got to hang on when this kind of stuff happens. Or what's our job? Monetize the chart. So if price is falling, you're going to have a hard time finding long opportunities on what you see on your screen. You can see the failure of the 200 right in the center, and that's our basic bull bear indicator. So how are you going to monetize this chart? You have to sell short. There's just really not a lot of other options. But for some reason, and I guess just because it's kind of left foot, right foot, your shoes are on the wrong foot, but yeah, it feels awkward at first. Granted, felt the same way. But after a while, it's just as natural as tracking price to the upside. And it's one of the reasons why I suggest that when you're looking at your chart, start with the downside risk first. Right? I always used to look, I want to hit it out of the park. And that's all I could see. And then, you trip and fall over first base, right? So you've got to make sure you know where the risk is. And if you manage the risk, you look where the downside risk is first. It's a perfect example. This is the point of control. This is what you would have been looking at all through here. So if you can't break the point of control, and here comes the 20, which is the first touch since you failed it, essentially, guess what? Not good, right? You can't break out. There's your fake out candle, but you don't get a signal there or anything like that, and then this comes in and haunts you. But two equal tops, it's one of those candles that kind of flushes people, and there's your re-entry. And it all starts over again. So is all this consolidation was on the 4-hour Solana chart was just, when you see this consolidation and you think it's going to push price to the upside, how it's just gassing up for that next move higher? Well, it was just gassing up to push it down. That's it. That's why you can't assume all the time that when you come out of consolidation, you go higher. And there's a lot of people who have been in this space who for the long time only experience price up and not price down. And they're learning that when price goes down, it goes down fast. And those, what they thought were once dips, were falling knives. And that's why it's important to learn how to read price on a chart. You don't have to be an economist. You don't have to be a math genius. Is all you have to do is what you're told when the chart tells you, and understand a few basic rules on the behavior of price and how it moves in areas of certain points of support and resistance. Understanding how to identify the trend through all of the manic price action. You could have, look, I would have probably shorted anywhere here as price wick this 200, but there's your safe entry. At no time, even through all of this consolidation, in this case, which is telling you the sellers really haven't left, they're just resting, and then they start to party again. And then we just rinse and repeat our rules. Right? So, breakdown. This is actually one of those impulse down scenarios, and then you go sideways and then impulse down again like a staircase. Here's your first kind of attempt. Failure at the 20. Like, how many times have you looked at a chart and it's doing one of these to the downside, and it keeps hitting the same thing over and over and over again, and then just continues its momentum. So, here we are yet again. We're failing the 20, and you've peeled back. Green candle, yes, but not even challenging the 5 EMA or the T line yet. And that's one of the things that's going to help change the trend, and it's just not there. Doesn't mean it's not coming or anything like that, but it's not there yet. And you just keep peeling back this onion. Like, you don't want to have 3% down days on anything, right? And here's our friend that we love to talk about. I'll tell you one thing. These guys have a banging PR agency, because, man, did they ever get the word out. Everybody was talking about this. And this is how you separate group speak from reality. I talk about this all the time. This isn't about what people say. It's about what money's doing. This is a real-time representation of what money's doing, not what people are saying. I don't care what people are saying. I only care what money's doing. All the other stuff, no time. So as people are on social media talking this thing up like it's the second coming of whatever, price is going nowhere but down. But the same conversation about how wonderful it is, and maybe it is happening. So what's more important to you? What price is doing or what people are saying? Because if you're listening to what the people are saying, you're going to make a mistake. Because if you're listening to what the people are saying, this doesn't have a lot of time to it, so let me just drop a time frame down. If you're listening to what people are saying, this is the best thing since Bitcoin. I'm just using that as an example. Best thing, best thing, best thing, best thing, best thing, best thing. All you're hearing is it's the best thing. And you're rationalizing buying all the way down, thinking that you're never going to see price this low again. But yet somehow, like a nightmare, it just keeps getting worse and worse and worse. So I ask again, what's more important? What people are saying or what money is doing? I kind of know what I think. The money is the most important part, right? The money is important. The trend is important. What people are saying on social media, It's interesting sometimes. Sometimes it's just complete and total BS. I don't know. I don't care. As all I'm focused on is what the money's doing. And, you know, if you were looking at this 12-hour chart thinking about shorting up here, thinking that, you missed it. No, you didn't miss anything. You haven't missed anything. The market hasn't told you all the way down to here that was in a big sell mode. And lo and behold, when you do get a signal to go long, and again, I'm just using the 12-hour here because there's not a lot of trading time. Ultimately, you can start to see, failed breakout. Come back and take out the previous wave low. This probably looked pretty obvious on the daily. Yeah. This is a bearish chart. I don't understand. I've seen what it does and everything. I've been there, but it's okay. But at the end of the day, it's what the money does. Now, I'm not suggesting that it's going to go to zero. As all I'm saying is it didn't have much of a heartbeat. But quite often, things like this get ground down, and then one day, all of a sudden, they pop an irrational amount to the upside. That could happen here too. But I think it's really important to differentiate between what money's doing and what people are saying. And that maybe this is the question where you ask yourself, am I a trader or am I an investor? Yes, the ultimate goal is to gain ROI. But investors would likely just buy all the way down because they believe in it. That's fine. The trader would be more inclined to wait until they can identify a bottom and then buy it. You don't have to pick one, but it helps because you can't be both. Right? You can't call yourself a trader as you buy every candle on the way down, because that's not what they do. Right? You don't add to a bad, like if you bought up here, you're going to continue to spend money as price is moving down. No, that's insanity. But the problem is, unless you have a tool to measure whether or not you're adding to because it's reversing, or you're just adding at a green candle and a downtrend, yeah, that's where everybody gets into trouble. Okay. What money's doing is more important than what people are saying. It's just a fact. Now, they say there's a bull market somewhere all the time. And this is our friend Zcash. And it's gone straight up, right? No real 5-alarm fires anywhere in here. Even when you had a few days of retracement, it was just simply a retracement. Didn't break trend, plus it, got some support obviously from the 20. This is still a bullish chart. Is it running hot? Is it overbought? Yeah, maybe a little bit for sure. But I can't argue with what the chart tells us. You don't like to see price get too far away from the T line and the 5 EMA. The horse doesn't like to get too far away from the barn. When it does, it likes to come back. But it's still a very bullish chart. The weekly looks ridiculous, right? So, but, if you bought that signal off the weekly, are you complaining? No. Not now. Buying at like 40 some odd dollars and you're now up at 537. I don't think you're complaining. But one thing you have to understand is that when price does come back to test or retrace, it will come back and find these levels. That's just what happens. Sometimes it happens quick, sometimes it might take a little bit of time, but it happens. We've seen it time and time and time again. And, you know, when this thing does start to fade, where will it fade to? Come back to the 5 EMA or the T-line on this daily, and if it doesn't hold those levels, it'll start to look for the 20. And benches of past price. And it's not an accident that that's in there and lines up with that, with the 20. And if it doesn't hold the 20, and this kind of would be a first touch if it hits it, but if it doesn't hold it, you start looking to the next level down. You've got the point of control, the 50 down here, paying attention to this big gap beneath it. But the first test would be these levels, then in here. But there's always a bull market somewhere. It's true. You might have to look a little bit to find it, but there's always, you know, something that is moving in the opposite direction of the market. We talked about NVIDIA in our last session because we were up here. This is Tuesday's candle right here. We talked about these doji candles in this big kind of point, right? And that point's created because there's momentum to the downside where price is pulling that short-term indicator. And because it's a short term, it pulls it quickly and then it starts to drag through other levels. So we knew there was something going on, and what did we say? We said, well, if we start to break down, look to the 20. Well, we found it. And in fact, today we've broken through it. Do you remember us talking about, hey, look how it likes the 50. Look for it to come back to the 50, and I believe that's what it's doing. This is not the first tangle with the 50 at all. So when we come back and test it, you're holding your breath a little bit, saying, is it going to hold the 50 here and then bounce and try and, you know, take out those highs, or does it need a little bit more of a reset and then this time break the 50, fall off this weak volume shelf here to the right into this gappy area that you see here, back to the 200 and the upper value range? Most people don't want to think about what the reversals are or feel like. Right? So we use multi-time frame analysis, that's the fractal part, but we also use fibs. Right? So what if we just took, let's say this is our swing low and this is our swing high. What are we looking for? Well, automatically, in these reversals, we're going to look for 50%. It's never an unreasonable level. And where's 50% on the daily NVIDIA chart? Right on top of the 200 MA. Where's 618? $134. Now, if we catch the 3.8 level, then this is really just a trading retracement more than anything else. So it'll be interesting to see what happens here. But there's 50%. This is completely acceptable that you run back 50%. 618 is even acceptable. So you can see there's relevance, whether it be 618, whether it be 50% and the 200, and the upper value range, there is relevance at that level. %50 on the weekly brings you back to the 50. So this is, if NVIDIA was to break down, and right now, let's be honest, you're wicking the T line, so technically we're still bullish. Bearish engulfing candle, no doubt, but you know, you've held the T line. If you were to break down to the 20, or find the 50 on the weekly, knowing how much money is in this, what would that do to the rest of the market? What would that do to the other 6 of the Mag 7? All hypothetical, of course, but I'm pretty sure there'll be a sucking sound. And why do we do this? Why are we doing this? We're doing this, A, because we have to monetize the chart. And secondly, once you've monetized it, you have to figure out, well, how do I not lose my shirt now? Right? You want to be able to identify what this top might look like. So when you look at this weekly chart, and the weeklies are going to be certainly a little more clean for trend, and there's going to be less noise. When you look at this weekly chart, can you identify that, yeah, this is kind of looking like it might be a toppy range, and safely take your money off, close whatever you want to do to monetize or reduce your risk? Yeah, there's a value to that. Because what you don't want to do is ride it all the way down and give everything away. Because one of the things that people I believe a lot of us aren't recognizing on our charts, is that almost everything is trading on these longer time frames with real weak volume support and big ass gaps. And it's just not necessarily a recipe for success when you're when you're working to the downside. It is not irrational to come back to the 200 MA on a weekly chart. But it sounds irrational because that level's like $77, $76. So yeah, it sounds crazy. But it might sound crazy. But price doesn't care where the market put those levels. It's going to come back and find them. It's really good at it. What our job is to get really good at not getting caught up in the emotional part of what we're doing. Just simply focusing on opportunities to monetize the chart, whether it be over longer time frames or over shorter time frames. That's the drill. If we look at this, SPX, which is the S&P 500, actually another idea. Let's go here. Okay, so what we have here is SPX, and we have it on a few different time frames. And all I've done is I've just gone into TradingView, up into the right side of your trading panel, and you'll see all these different options for chart layout, and I'm just using one of those from within here to do this. That's how I got here. 1 hour SPY, 4 hour daily. So if you're waking up today and the market commentary is that the market is selling off today, where do we kind of go from here? Right? This is the daily chart. You're spitting a red signal today with a red candle. And all the commentary is, well, the market's down another 1 point something %. But did the market start to melt down today? Like, was it today that it started to melt down? If you believe that, then you're probably watching too much Bloomberg or CNBC or certainly Fox or anything else that rings like that. That's the noise. That's the stuff you got to stay away from. The market discounts everything. It doesn't care about what people say. It doesn't care about the analysts talk about. Interesting. Validates them, I guess. But at the end of the day, it's the trend and where the price is that matters. And if you go down that rabbit hole where that's your focus, you're going to miss opportunity. Because when did this market really start to break down? Have you ever heard the analogy, like I think it was Mark Twain who wrote, it was like, how did you lose your money? Slowly at first, then really, really, really fast. Why does that happen in this biz? It happens when you can't identify something that most people don't see coming. The market just didn't decide to break down today on Thursday at X hour. It was already happening. Go to your hourly chart. This is where the fractal analysis comes in. Back on the 29th, up here, at the top of that nice leg higher, you got a sell signal. Now, most of us who are rational people are looking at the current status of the market going, it makes me nervous. I don't like this. It's a little bit uncomfortable, so on and so forth. There's a lot of that going on. So if that's your bias, you're looking for a short opportunity and you think the market's toppy, well, shorten the time frame up so that you can see the move on the daily that everyone wants to talk about and start to build trades around so that you can actually see that long before it happens. That's what this is illustrating. This is what fractal analysis allows you to take advantage of. Our daily candle doesn't tell us a complete story. There's a story inside that candle itself. And in order to read that story, you got to open the book. And when you open the book, you open the candle, you're going to see things developing within here long before it shows up on that longer time frame. This is why I typically use a 1 hour, a 4 hour in a daily chart. Right? I really want to get a nice long trade. Long as in duration, long or short. Right? I don't want to be trading in and out of stuff every 5 minutes. What I'm really looking for is a nice opportunity, get a good early entry that turns out on those longer time frames to show me some confluence, which then you start saying, hey, maybe I'm onto something. Maybe I have an early entry on a potential trend move, not just a retracement back down. Maybe this is a trend move. Same rationale would be if you were looking to go long, right? But if you're looking at the 1 hour, nice run up, 1 hour sell signal. And once it starts to pay, of course, you're looking at the 4 hour chart. Because does the 4 hour chart look like it starts to want to roll like the 1 hour chart does? Everything's fractal. What you see on one time frame, you can see on another. And when that starts to show up on the 4 hour, and you get that kind of confirmation on the 4 hour, are you hoping and looking at the 1 hour going, this is what I was expecting, or this is what I was hoping? You're darn right. Because now, so what's your opportunity on this daily chart? And we're just looking at a volume profile. What do you want to happen? You want it to fall off this little shelf here into this gray gappy area, but ultimately you want to come back down here to the point of control, or the upper value range, which are tightly twined here. So around 6,000, 6,100 and change. That's the trade, right? But everybody's trying to get in it here. When was the opportunity to get in it? The 29th at 2:30 p.m. Yeah, long before Halloween. Days before Halloween. This is how you find trades that run. Or maybe they find you, or maybe you stumble into them. But the only way, is it lucky? No, you have to be prepared in order to have that luck. This is just the methodology that I use to prepare. It's simple fractal analysis. This could be a monthly, weekly, and daily chart. And in those time frames, I'm obviously looking at a longer duration of a trade, even more so than what I would get off the daily. But the point is, the methodology and how you look at it is all the same. Right? If I'm wanting to make a nice trade off the daily, I'm looking at the 4 hour and the 1 hour to kind of sneak that entry in before it gets too crowded. And when you're in up here early with your feet up, as things start to, because ultimately there will be a little bit of a retrace over time, but you know what? If you're in early at the top of the trend or the retracement, whatever it turns out to be, you have a little bit of liberty on whether or not you want to ride that out. But it puts you in the driver's seat. Those are good problems to have. It's better than getting in the trade. I'll just take this away for one moment. But I mean, it's better than getting in the trade here today. Way better, right? Way better. This was your 1 hour entry. This candle up here, which is literally the top. That was your 1 hour entry. Would you prefer to have this entry, or do you want to be somewhere in here today? I know what I prefer. And it's not about, picking the top and picking the bottom. That's not even on your mind, right? It's just fractal analysis that will show you opportunity on that lower time frame, and hopefully as that trade starts to develop, it shows you confluence over the next longer time frame. And from that point, you're in the driver's seat and you have the ability to manage the trade any way that you want. But it's a heck of a lot easier than having to make panic sell decisions because prices started to pull back on this daily candle that you just got into today, and it's a matter of, do I take a haircut, watch it all retrace, and go away and roll the dice? Way easier to deal with that when you're in early. And when you're in early, I'm not saying you cheated or you did anything wrong. You just used fractal analysis to your benefit. You're looking for a nice duration trade off the daily chart. How do you find it? You just back up a little bit to the 4 hour and 1 hour. Doing this every day. Maybe different time frames at times, but this is the same thing I'm doing every day. And, once you lock into something and you start looking at the daily chart, and you can start to see patterns existing on the daily, then this could really get ugly and break down, right? You'll be happy if it gets down to the 50, but if it breaks the 50 and gets into this, you'll be giddy with excitement. If this candle bounces or hits the 50, starts to bounce, and you're in here somewhere, all of a sudden you got to start making a different decision. But when you're in at the beginning of the wave, so no, this isn't the start of the retracement. It actually started up here. Again, just look inside those candles. But these markets are not feeling super supportive right now. Let's look at BNB real quick because it's had a great run up. And, like always, nobody wants to think of price falling. But when it does, it's going to revisit the areas that it's been before. which means that the unfinished business on this chart, in all likelihood, yeah, so you filled the 100 as well. So in all likelihood, it's looking for the 200. Right now, this is one of those situations where you have impulse down and then you go sideways. Like, we haven't even challenged, or maybe you wick the 100 and fade it, but you haven't challenged the 5. So, is this, and this is the lower value range, is this just kind of a big rejection area and then you fall into this gap to the downside again? It's a possibility, right? So that's the downside risk. And I'm looking for this first as a typical rule because it prevents me from making mistakes long, right? But it also helps me identify short opportunities. But if this is a failure level in here and you start to fade, that's not good. That'll take you back to the 200. But it's not the end of the world, right? Like these moves, when they happen, it's just because, like, this is a better example. Price going parabolic spreads out these levels, and it's all that's happening is break one level, we found the next. Now you're getting some support from the weekly 20 MA on BNB. On the daily chart, it looks like a disaster, but that's all that's happening is you're getting support where you would hope to get support. Is it a long way from where you'd like it to be? Absolutely. But it's only that way because you were just parabolic to the upside. The current price revisiting past price phenomenon is going to happen no matter how parabolic or not price went. That's going to happen. And there's not a lot that we can do to stop it. What is... There we go. This is D-Wave. Same story. There's our volume profile. We've obviously been in here before. We've got this level dropped in here, but what's happening? You're breaking one level, we're finding the next. Coming back to the 50. So did you break the 20 here? Absolutely. But you didn't hit the 50, right? But everyone's saying, oh, you're wrong, didn't work. Well, yeah, who said we're done? You'll find it. This inability to break through here guarantees you're coming back to the 50, essentially. Now it's the first touch of the 50, so what would you expect? A little bit of love, a little bit of support. But if it doesn't get it, got this big gap in the point of control down here, which is like your euchre card, right? It's a big draw, and the 200 working its way up to it. Again, areas, these are just measures of price and time. And when price goes up over a short period of time, they get fanned out like that. But don't forget, current price is going to revisit past. And if you can accept that, then it makes the swings of the ups and downs a little easier to take because you know you're going to monetize them in both directions. Take the noise out of the chart on the weekly, and what do you see? Does it look a lot cleaner? Yeah. On the weekly, you can see the real nice support in and around the 20 here, again up here. So how many people said this was a double top? Right? We talk about this every week. This is why we use the methodology we do. So a lot of people are going to say that's a double top. Is it? What happened here? Is all that happened is you retraced, you came back to the 20 and got the support that you would expect or hope for, and price obviously moves higher and takes out the previous wave's high. Horse gets a little far away from the barn, comes back to it. All of this divergence to the upside is holding. More support off the 20. And this is another thing, right? You're going to be looking again here, going, oh, this time, this one's the double top. That's a double top, right? Spend enough time in some of these Telegram groups, and that's all you're going to hear. Is it a double top? No. It's just a continuation off the 20 like the other two times before it. This move, if it brings you back to the 20, it could bounce as well. But all of these things just feel catastrophic when they happen. Support off the 20, support off the 20, support off the 20. This is an ugly look, absolutely. But even with that ugly look, you could still retrace more, come back to the 20, and bounce, and then take out these highs. You come back to the 20 and fail because you have hit it a couple times. Well, you find that upper value range, a shelf, and then a big gap. And then the point of control. Again, this is a weekly chart, so that's a lot of time, but I'm just saying that's how price would fall, assuming that trend down was to continue. Right? And it doesn't matter what we look at. Whoops. This is Lilly. Eli Lilly. This is a meaningful breakout. Broken through here. Remember we talked about, maybe it was the point of control, but this is a really good example. Same type of action, but this is just at the upper value range. Talking about, geez, you know, if you can get through an area that it's had struggles with before, it usually runs a bit, and I think that's what's happening here. The weekly hopefully doesn't look as chaotic, right? A little cleaner on the weekly. What do you think might be going on here? Price has been doing what in this move up? Taking out previous highs. So it's looking to deal with this and then ultimately with that. So just like how we show you how price comes back, those failed breakouts, you know, take out the previous wave's low. Well, here you have them looking for the highs. And again, any time frame, doesn't matter. And if there's anything else you guys want to look at, is there miss anything? Pirate chain. Because, you know, here's something that's gone. Just total consolidation. And when price goes higher over a short period of time, it fans out all of these moving averages that are a representation, again, of time and price. Now, when price comes back, again, like we talk about, you know, when you're trading above the 20, the 50, and the 200, at some point, you're going to come back and check the 20 at the very least, and then once you'll fail it, and then you might be onto a breakdown. So there's your test of the 20, and this time it doesn't work out so well. And what are you looking for? You're looking for the 50-day moving average and likely this bench of past price in here. And again, they're somewhat related, right? Time and price. So that's not an accident that they align. And if you were to back this up, let's go to the 4-hour. Could we have maybe, snuck in a little earlier entry? Possibly. And there it is on the 1 hour. This is a real good tell. So this is the upper value range of the volume profile, and look at wick. Can't break it at all. And we like the breakdowns and the breakouts. This one just happened to be a breakdown. So these wicks up here was the upper value range on the 1 hour. That price couldn't break. And that's why we're using, in this case, the 1, the 4, and the daily. Because the fractal analysis gives me a really good look. Now, on this 4-hour chart, whether you took the short off, the 4 hour or the 1 hour, have you had any reason to go long yet? No, this has been a confirmed, this trend is still down. Here's a flush candle, maybe it stops somebody out, but knowing that the trend is still down allows you the comfort and security of re-entering the short with the probability of, again, knowing that you're on the right side of the trade, but the probability of it continuing. What happens when price falls into these gaps? It sinks pretty fast. And I hate to say it, but I have a feeling that this is coming back down here. And this is why we don't chase. This is why you don't chase stuff. Now, I'm not saying you're going to be able to, pause all the way down to 13 cents. That's not what I'm suggesting. But you don't want to chase. Just wait. Let the market come to you. Just because you have a little bit of cash on hand doesn't mean that you have to put it into play right away or put it to work. Sometimes the best trades are the ones you don't make. So let's take a look at some fibs on this thing. And fibs are somewhat psychological. There's all kinds of different schools of thought on how and why they work, but we know one thing. When we have a swing low and a swing high and we connect it, a reasonable place of return for price is the 50% level. And you'll see now that we've thrown fibs on it, because this is why we use fibs, fractals, and filters. You throw the fibs on it, there we are, right back to a place where it's been before. But the question now becomes, well, is it done? Like, does it mean now that I buy it? Well, this is just one tool that we have to help us make that decision. And at the moment, what do we know about what we see? Let me just take the fibs off just for a second. Are we still in a downtrend? Yeah. Is current price revisiting past? Yes. Has it completed its next tag yet? No, it hasn't. So I'm more inclined to just kind of sit on the sidelines a little while longer, because maybe it will be coming back here, and maybe that's when you pull the trigger. But ultimately, we just use our handful of tools to give us an idea if price is in an expected location and is the market showing signs of reversing. So if you're short, you can still be short, because I think there's still more to come. And we know if we don't hold 50% that 618 is our next logical target, and again, it's below the 50 in that case, and below the upper value range. But why don't we just kind of look at that 4-hour chart to get a different look and some more context as to what might be going on? So here's our 4-hour with the same set of fibs. And what's price doing on the 4-hour? It's failing the 200, and it's coming, obviously sitting at 50% still, but you're failing the 200. Well, isn't the 200 our most basic bull bear indicator? Yeah. So it hasn't really done that in, well, it did in here, but I mean, didn't close below it. This would be the first time it closes below the 200 on this time frame since September. We're well into November. So I think price is probably, I see in here where the upper value range is, that's a likely target. Here's the 1 hour. Well below the 200, well below the 50. Like, this is that kind of test and fail mode. Now you look at this 1 hour chart and you go, you're crossing your fingers for a snapback. But I don't see it. Like, stochastic RSI is still diverged down and expanding. Same with the Fisher. It's not showing any changes in, now that it's picked up this wave, like this is diverging down, this is showing us that the trend is pretty solid. And the Fisher doesn't throw you a lot of signals, right? It's using a Gaussian channel to filter out noise. And then the MACD, moving average and signal line, just dumped, diverged down, and starts showing a red histogram. All of this is reflective of what you see on your chart. So there's much more momentum to the downside here, I think. And this is why we do this, so that if you're a long-term investor, don't you want to buy in the right places to maximize the value of your money? Yes. But you got to calm down, and you just have to, again, let the market come to you. Get comfortable to what you see reappearing on your chart time and time and time again, because ultimately you have to trust that chart. That's how you monetize it. Just trust it. This is a language, right? If you believe that mathematics is a language, which it is, then you have to understand that this is a derivative of mathematics. And it is a language unto itself. Here's your daily Tesla chart that we looked at last week again. Have you fanned out all of these averages? Yeah. Why did you do that? Because price went higher over a short period of time and spread them out. If it falls over a short period of time, it does the same thing in reverse. Still holding the 20, with the 50 kind of sitting at around 419, but in this gray trading and all of this gray volume, it can be weak. And if price lags and falls into this gap, then you start looking at these lower levels. Price is going to be comfortable in areas where it's been before, and it's more comfortable in areas where more price has been. So can it hang around up in these areas? Yeah, sure it can. But where is it most comfortable? Where it has its most concentrated areas of past price. So that brings us to T-Mobile. There's the daily for T-Mobile. Is this a bullish or bearish chart? Well, the daily doesn't look so healthy. Okay, so now we're going to take the noise out. We're going to extend our time frame. We're using a weekly, and it's taking a lot of that, again, noise off our chart. And So maybe it'll be relevant one day. We'll see. As soon as I connect, I like to just connect those points when I get a chance. So I don't like this Delatoshi, not quite yet. You're failing the 50 and the 20 in here. Split the 100 like it wasn't there. Like I think it's obviously looking for down here. And you know, there's lots of you could even you could build a case for that even ultimately, but because if you come back to the 200 and don't hold, like if price treats the 200 like it has everything else, it puts that in play quite quickly, and also obviously the point of control. And it's not irrational. Like all of this will feel irrational, but it's really not in the grand scheme of things. It's coming back to a level that, you know, the 200, you should not be surprised when price comes back there. What surprises you is the velocity. When you get into these kind of capitulations, reversals, whatever we want to identify it as, price usually falls quite quick. And it gives people that kind of feeling, well, just when you think it's over and it's safe to go back in the water, you know, you get hit again. I think that's kind of what's happening here. So I don't know if it's worth looking at the monthly here or not. Yeah, why not? So we're looking for the 50 on the monthly. Or, like, look how this 151 lines up with this nicely on the monthly chart, but where's the 50? 172. Huh. Okay. So 172 is somewhere in here. I don't remember it was 172 what, but I think you're kind of cutting off these bottoms in here, Delatoshi. So that 172 is the 50 on the monthly. Interesting. So the 50 on the monthly is in play, the 200 on the weekly is in play. There's your 50. So that would be, again, this is beautiful from a fractal perspective. You can see that on the monthly chart. That 151 is this bench through here. And that's a reasonable place for price to want to go. Will it stay there? I don't know. Might fall a little bit south of that. Who knows? I'm just identifying areas of interest or targets. But that's my take on this is T-Mobile. It hasn't had a good couple months, I guess. Really a good year. But I think that's consistent with a lot of these things. And sometimes it's sector specific, so you know we don't want to beat up entirely on T-Mobile. Let's take a look at gold real quick. This is the weekly chart. So all of the drama that we've had about, you know, gold is dead, don't buy gold, sell your gold, buy Bitcoin. I don't know. Like, somebody actually is still buying gold, and lots of it. This weekly chart is all you've done is you've come back to the T line on the weekly. So in other words, these three candles have not broken trend, and they may turn out to be just three retracement candles like we showed on the previous chart that maybe just bounce and continue to move on. If we fail the T line, we know what our next topic is. It's coming back to the 20 like it has here and here and then back here. Haven't even reached the 50 yet. Now, this is interesting because we have a little bit of what feels like a somewhat of a reversal, but at the end of the day, all this divergence on the daily is still in play and intact, and we can't close above the T line. So we are still working under a sell, kind of bearish situation, and these could simply be a couple green candles that turn out to be 2 green candles in a downtrend. We don't have a confirmation that the market is reversing yet. And when you see this doji looking thing with a little bit of a wick here on the to the downside on the daily, what's that look on the 4-hour? Well, that candle that didn't look like it was the little engine that could created this up in here. So this isn't necessarily like, it's not a fade, but because it hasn't broken trend yet, but you can see there's some weakness in there. Now if we go to the 1-hour, you're going to see this wick up reflected right in here. So have we broken trend to the downside even with these 3-hourly candles? No, not yet. Now this is an example where you might want to use those 3 windows so that you can have an hourly, a 4-hour, and a daily, or whatever else you want to use, so you can see it all in one view. These could simply be 3 green candles in a further downtrend. And this is where a lot of us make mistakes, and I'm speaking for myself. This is why I kind of took the time to do this, because, and again, this could be any asset on any time frame, but you see those 3 green candles and you're like, nope, you know what, yep, the bottom is in, it's going to reverse, you're already planning on taking out these highs up here and breaking out, and you know, you've already written a nice story, only to find out in 30 minutes to another hour that you couldn't break the T line, couldn't break the 5 EMA, and this just turned out to be a failed breakout. This, because it would be the first test of the 20 as well. This turns out to be a failed breakout, coming back, taking out the previous wave's low, and potentially breaking the 50 on that move too. So again, we have 3 choices: up, down, and sideways. Right? Those are kind of the up and the down. But not a confirmation yet. But the gold chart would actually be a nice one to have in those windows. And you're just basically sitting on the point of control right now. So it's a little bit of hurry up and wait. There is something. Now, everybody wants to find something that just goes bananas, right? And the reality is that when you've had a stock that's been beaten up, and there's lots of them out there, I'm just using this one as an example because it's one that's familiar to me. The symbol is BW. It's called Babcock and Wilcox, and you know, at one time it was, you know, a very expensive stock and probably had a very nice story to tell, but the chart tells a story as well, and it wasn't a happy one. You can see the breakdowns and whatever was going on fundamentally here. I don't even care. I don't know. I don't need to know. I can see what I need to see. But these things don't stay, you know, they either go broke or maybe they break out, and everybody's looking for something that might have been beaten up that potentially could break out. And this is one that was kind of a symbol that was thrown at me, and I was like, oh my gosh, what an ugly chart that is. But when you're looking at this incredibly ugly chart, um, you're saying to yourself, well, what's the downside risk here? Right? Not pretty limited, right? Like with a little bit of risk mitigation, the upside outweighs the downside. But you know that it's going to take something, to give it a heartbeat. But okay, so this is the weekly, and you can see the price bottomed at around 32 cents. And then something happened. What happened? I don't know. No idea. Because all I know is that after a little bit of consideration, you get a buy signal. And then all of the sudden, this company that you couldn't identify if it had a heartbeat, all of a sudden has a heartbeat. You don't know what comes after the candle that you bought. Is all you have to do is say, I was told to buy. There's divergence to the upside there, and I'm talking about the T line and stuff. And now I just hurry up and wait unless the market tells me to get out. And the thing just went up. And up and up and up and up. And there's probably hundreds and hundreds of charts or companies like this. And it doesn't mean that we trade them or analyze them any differently. I wanted to show you the daily chart because as price was moving higher, this would be that bottom there on the other time frame that we showed. But that's representative of that early signal. But as price starts to move higher, you can notice even on the daily, something that couldn't break trend or couldn't break resistance for weeks and weeks and weeks and weeks and probably almost years when you back the chart up, all of a sudden, when it gets to resistance, starts to break through. Maybe that's a fluke. That's not a fluke. What's happening? Retracing, getting support from where you want to get it, right at the 20. Breaking again. Now you're at the 100 on the daily. Coming back to the 20. Breaking again. And this time with even more momentum. What's price looking for? Past price. Why do I use long-term averages on my charts? This is why. Because it helps me see things that maybe other people aren't looking at. And because I understand the relationship of how price reacts when it gets to these levels, it helps me manage my trade. Now we break through. We did this with the 20, the 50, 200, the 500, and the 1,000. This thing couldn't break resistance if you paid it. Now all of a sudden it was picking them off like cherries. Pay attention to that stuff. Are you going to find these stocks all the time, and are they going to be the ones that break out? Probably not. They're not all going to do that, no. But this is one that did. And maybe it's not done. I don't know. We're going to find out. Right? The weekly still looks bullish, like this is one hot as a firecracker candle. But do you think it's been pining to break out past the 200 for a while? Yeah. And is the 200 our most basic bull bear indicator on any time frame that we're using? Yeah. So that's bullish. What's price looking for? A previous wave's high. When it broke this one, it had to run to find the next one. Breaking the 200, this is a nice chart now. the dog's breakfast for years and years and years, and then all of a sudden, a nice chart. And there's your monthly. And I know our friend Rico pays attention to the monthly charts now. And here's a buy signal on the monthly chart. Have we had others? Yes. Have they disappointed us? Yep. Will this one disappoint us? Maybe. But don't you want to find out? Especially knowing that you're on the right side? Especially knowing that you've broken the 50 on the monthly? Green candles at the 50 on any time frame I wake up for. What's our next target? Up here. 100 MA monthly at 8 and change. We don't know if it's going to get there. So all we can do is allow the chart to guide us and help us determine whether or not we're headed in the right direction. But it doesn't matter if it's a stock. It doesn't matter if it's a commodity. It doesn't matter. Price is going to do what price is going to do. It's going to continue to look for that next level, whether we like it or not. Right? This is oil that we've looked at before, and we'll just do it real quick. Take all this stuff off. The only thing remaining that it hasn't checked off yet is this. And as long as we continue to see this divergence in place, price trading below certain levels and failures of that trend line, to, of course, a handful of other things, that still is the target. This looks like a failed breakout, but on the monthly. That's all. So it doesn't matter if it's a commodity, a stock, it's crypto. Price behaves exactly the same way. And the easiest thing for us to do is not to try and predict where it's going to go. There's no prize for that. Is all we do is follow. If it wants to, move higher, we'll be there. If it wants to fade, we can be there too. And you're going to find it a lot easier getting off some of the shorter time frames and onto the longer ones, so that you can catch these runners with less anxiety now, because now you have a filter to help you determine whether or not you're on the right side of the trade, because the trend is in your favor. And you don't get freaked out when you see red candles, because you understand that the trend is holding. So that'll be it for today, and we will come back on Tuesday, and we will see what's in store for us on Tuesday. But thanks for stopping by.